on, everyone? Thank you for watching another episode of Insightful Principles. Happy New Year. Hope you all have a safe and blessed, prosperous 2023. And I have a lot of exciting content coming for you all this year. Definitely going to be a much more powerful guest here on the show, bringing just some refreshing content in the areas of finance, business, and investing. So definitely continue to stay tuned and continue to like, subscribe, share this video. Don't forget to hit that notification bell below so you can be notified every week when I drop content. In today's episode, I want to really talk about my 2023 thematic investing themes. And thematic is simply sector investing. So looking at particular sectors, I want to break down that for you all and give you all some ideas of what my predictions are for the year and what I expect to be some great growing sectors kind of going throughout 2023. I think this is going to be a market where you're going to have a mix of just beyond the stock and the bond allocation. The 60-40 is dramatically changing. We've seen that in 2022. Stock and bonds had their worst year in such a long time. And I want to kind of explain that as an investor in this type of market, looking at alternative assets, having a diversified portfolio is going to be very key. And I think in this type of market, you have to be selective. You can't necessarily just go with the same blueprint with looking at certain high growth tech companies. You know, I think the market is changing, and I want to kind of talk about some of my ideas of what I'm thinking as far as throughout the year. So some of the themes that I'm looking for sectors is, you know, commodities, cybersecurity, robotics, and artificial intelligence. I think that those are going to be not only sectors that are going to grow throughout 2023, but I do expect those sectors, as we kind of move forward throughout this decade to 2030, they are going to continue to improve. And in this type of market, I think that being defensive, looking at companies that are going to continue to be able to weather storms whenever we have an economic downturn, which we're experiencing right now. We're seeing that demand is going down, interest rates are going up. So you want to look for companies that are still being able to produce cash flow in this type of market and that are not overvalued. So, you know, I definitely think all recessions are not the same. They certainly can change. So the sectors that I go throughout today's episode, just keep in mind that historically, even though a defensive sector may do better in one recession, it could also not do as well in another recession. So when you look through the history of time, typically healthcare, consumer staples, utilities, industrials, these are sectors that tend to do well in a recession. In 2022, the commodity market did okay, but we expected gold, we expected a lot of these different natural resources to improve and to become and go a lot higher, but it definitely had a tough year. And I think that oil definitely had a great spike up when we had the issues with Russia and Ukraine, and it kind of normalized towards the end of the year. But I still think hard assets, so things like physical gold and silver, looking at natural resources and commodities, could be beneficiaries of higher inflation, especially in a recessionary environment. I think it's suitable to look at those particular asset classes. And I think that the reason why I like commodities is because not only is it an inflation hedge, but also a store of value. And I think in this type of market, preserving your capital, not seeing your capital go down, you want to make sure that you are still protecting what you have accumulated, because it's not about how much you make in the market, it's about how much you keep. So that's why I like commodities in my portfolio and why I think it is a good sector and a theme to focus on, just because of a lot of the things that we're going to be expecting with a lot of the economic uncertainty. And I also think that some of the reasons of why gold could have a bullish year is because of just stock valuations in looking at the price of earnings with a lot of these high-tech growth companies. They are overvalued. Even that we have seen a lot of just decrease in the price with a lot of those major names, whether you're looking at Google, you know, Tesla, Amazon, they have corrected and have come down. But I think that the stock valuations, are overpriced still, and looking at commodities could be a great way to find something that's going to be undervalued. I think, like I mentioned, the recession risk is another reason why gold could have a bullish year, and also combined with a weaker dollar and inflation remaining much higher than the Fed's target could be some of the reasons why gold can increase and go much higher throughout the year. Now, one thing I do want to show you all is just kind of looking at the price of gold of what it's kind of done over the last 10 years. And even if you go back and look more in early 2010, 27.74%. You can see in 2022, the price didn't really do much at all. It was at negative 0.23%, but you had an index like the S&P 500 that was down 19% year to date. The Dow was down somewhere between 8 to 10%, and the NASDAQ was down the most out of all of those main sectors. But when I look at gold and seeing that it pretty much stayed stable. It didn't have, a negative 10%. It pretty much stayed right where it was at. And, I think that's a good sign, especially when you talk about the stability of the preservation of your wealth. It's very important to look at those aspects. And I think when you look at 2001, didn't really do much in that year. 2008, these was when we were dealing with the dot-com bubble in the early 2000s and 2008 with the great financial crisis. It had okay years, but if you look even shortly after 2008, we had 2 great years of plus 25% of growth when it comes to the price of gold. So I definitely like gold. I think having that is really as insurance, and it gives you that store of value. Also, if you really look at what gold has done since November of 2022, it has been at a 6-month high. And this is kind of showing just the spot gold price over the past 12 months, where since pretty much November, gold was somewhere around 1600s, somewhere around there with the price of last year. And now in January of 2023, it's had a little spike up. Right now, last time I looked, it closed somewhere around 1830. So I think that it is good to see that over the last you're looking at over the last 3 months, and even with over the last 6 months, we have had a 6-month high with the price of gold. Is definitely a good sign to see. Also, when I think about just gold reserves, I think that's another reason why I'm positive that the price of gold is going to continue to improve over time, especially, looking at the landscape we're in this year, is because there has been much more activity with central banks across the world buying gold. You look at Turkey, you look at Russia, China, all of these countries are buying gold at a rapid pace. Even the United States, they're the largest holder of gold reserves. And you can see here, the United States has about 8,133 tons of gold, with Germany being the second highest, and then you can kind of see Italy, France, and Russia. So I think that that's very interesting, and one thing that I'm paying a lot of attention to. I think that I still like energy throughout this year, and that ties in well with commodities. I think, those things are going to improve, especially when we think about higher inflation. Most of the time, when you think about energy commodities, whether it's oil and gas, and even when we start talking about natural resources, so things that are dealing with, water, coal, even when we start talking about agriculture with just cattle, corn, cotton, all of these different things, rice, beans. I like investing in things that people are going to need regardless if we're in a recession, if we're in an economic downturn. People are still going to have to pay for these different products and services, but also investing on the back end with the production and knowing that these farmers are going to have to produce these goods, and investing in these natural resources, it allows you to be able to get some exposure in the commodity space that can allow you to be able to build your portfolio and maintain those profits throughout the year. Because I think that this is going to be a year where we're going to continue to see volatility, especially as the Fed continues to raise rates. You have to position your portfolio to have a defensive approach, but you still do want to have a long-term approach. So I still like tech. I still like growth, and I think you have to be selective with growth. But I also think that focusing on the value, looking at commodities, looking at natural resources, looking at assets like Bitcoin, I like these different elements because I just think that it allows you to be able to position yourself and diversify your portfolio beyond the 60-40 that is typically, kind of the go-to in the financial planning space. And, I think when it comes to Bitcoin, the fundamentals of the technology has not changed. It's only going to continue to improve. And I think that there's going to be a big separation of people being educated between the differences of what the Bitcoin network is and looking at all of these other alternative coins, whether you're looking at Ethereum, Cardano, Solana. I think the network will continue to grow, and more people are going to invest in this technology when they understand that our monetary system here in the US is constantly being debased. We live in a society where the dollar really is only existent because of credit expansion. If there wasn't any credit expansion, the dollar would not be as powerful as it is. And I think when you look at something like Bitcoin, it doesn't require debt for the velocity of money. Jeff Booth is a person that has mentioned this a lot. I love how also Dylan Lacard, he actually works for Bitcoin Magazine. He talks a lot about how the reason why Bitcoin is so impactful because it doesn't require any type of manipulation for the cost of capital. When you look at our US dollar, they constantly print money, and then it gets to the point where they will also impact you when it comes to inflation. Use that as a tax on your money in order to be able to pay back their previous debts. So I just think it's a very convoluted system, and that's why I'm invested in Bitcoin, because it's a hedge against the debasement of our monetary system. And I also understand that this technology is going to change the world. And I think also when I think about Bitcoin, you have to also think about just the national debt that the US has, and that this bubble will eventually burst. No one knows the timing, but I think that when you look at the United States, them being in a deficit since 2001, and also how the interest expense on the debt is becoming so increasingly high that the government is no longer going to be able to fund healthcare spending, fund Medicare, fund Social Security. So all of these different things, it's going to eventually collapse. It will have its time. These things take decades to happen, but I still think that this is why I have my thesis with Bitcoin, because I understand the difference of how it separates from the broad crypto space, and also the problem that it's trying to solve when it comes to money and just being a monetary asset. Now, another investing theme that I really like is cybersecurity as well. I think I did some research, and it talked about how cyber attacks are actually up 81% over the pre-pandemic levels, and the economic costs that they inflict are set to reach $10.5 trillion. And that's a lot of money. And when you think about that, a lot of these tech companies and just companies in general, whether they're in the consumer discretionary space, they're in the oil and gas space, they're, in the industrial space, you have to have cybersecurity. You have to make sure that you're being able to protect yourself against hackers and things like that. So when I talk about being selective in the tech space, this is a particular sector that I think that has potential to grow. Many companies are now having to cut back on spending because of economic uncertainty, but one area that they're not cutting back on is cybersecurity, because you simply need it. It's a necessity. And even if you can look here at this chart, cybersecurity is the one technology that is least likely to be cut down in a downturn with the market. So you see it's 30% less likely to be cut down. You look at software, 23%. Digitalization is 18%. So I like those numbers. I think when you look at SaaS companies, software as a service, those contracts are being extended. And then there also is a lot new capital that's coming into cybersecurity hardware solutions for data centers and also servers. And then when you think about biometric security, so when you look at your iPhone, when you have to scan in with your Face ID, all of these different things are projected to have an annual growth rate of 14.1% through 2027. So I like that. I think biometric security, looking at getting exposure into those particular niches within the cybersecurity market, looking at the different cybersecurity hardware solutions for data centers is going to be important. And I also like robotics as well. You know, I think as we continue throughout this decade, one thing that we even seen post the pandemic is a lot more people are working from home. And even when we had those different challenges, a lot of CEOs and a lot of companies are starting to realize that they want to look at ways of how they can reduce their labor costs. And unfortunately, robotics and artificial intelligence is going to replace a lot of jobs when you think about food and retail, or if you look at warehouses, you know, logistics. Even when you think about manufacturing, healthcare, all of these industries are going to be interrupted by robotics and artificial intelligence, because a lot of CEOs are realizing it can help alleviate cost pressures. And then also it helps with just improving the automation process and allowing things to become much faster. And, you know, for every dollar of increased wages, the investment in robotics becomes increasingly attractive, in my opinion. And I think the ongoing growth within the robotic space is being driven by not just only rising labor costs, but lower robotics prices. So this chart also really breaks down at automation and showing you the cost of automation and how it's fallen in comparison with labor costs. So this blue line that you see here is labor costs. You see that has kind of steadily kind of went up on an upward trend. But robot prices has been decreasing. So I think when you look at stuff like that, companies are starting to realize that they want to try to help alleviate some of the costs when it comes to labor. And I'm starting to see also on the financial planning side a lot of different robo-advisors, and I think people, you know, like that other element, you know, of having their portfolios kind of done by a robo-advisor, and it's pretty much automatically set for them and it automatically changes. And another artificial intelligence theme and technology that I'm really paying attention to is ChatGPT. This is pretty much artificial intelligence chat that people are able to use, where you can be able to conversate with a robot in a conversational way, and they actually are providing responses just like a human, and it's very interactive. And I read some things that talked about how, you know, you can pretty much ask it anything. It's able to reject any type of inappropriate responses, and I think that is going to be another aspect of artificial intelligence, is looking at these creative ways digitally, how people can be able to communicate and have the same interactions that you would have with a human, whether that's going to the grocery store, which we already kind of see that now with self-checkout aisles. And, you know, I think that it's going to be interesting to see with ChatGPT how that continues to grow within the artificial intelligence space. So all of these are themes that I think that is going to continue to grow, not only in 2023, but moving forward beyond. You know, I think cybersecurity, looking at robotics and artificial intelligence, commodities, you know, looking at things that are, you know, both on the clean energy side, but looking at things that are natural resources, looking at hard assets like Bitcoin, looking at gold, looking at silver. And let me know what you think in the comments. I would love to know what are your guys's and gals' opinions when it comes to what you expect is going to grow, what your predictions are within just the stock market, but also within the crypto market, you know, the precious metals market. What are your expectations for the year? I would love to know. But as always, if you can continue to like, subscribe, and share this video. Don't forget to hit that notification bell below so you can be notified every week when I drop content. And I thank you all so much for watching, and take care.